Buying a home may be getting a little bit easier. Now, let's not get wild here. I'm just saying a little easier. That's because mortgage rates just fell to the lowest level we've seen in more than a year. Freddie Mac just reported the average mortgage rate for the most popular mortgage in the U.S., the 30-year fixed, hit 6.47% this week. Freddie Mac also says this decrease has resulted in a 42% spike in existing homeowners refinancing their mortgages. So here's the chart from Freddie Mac for the last 3 years of the average mortgage rate here in the United States. You can see right there, 6.47% for the week ending August 8th. The last time we saw a rate this low was right there in May of 2023 when the 30-year fixed was at 6.39%. Both of those numbers are much, much higher than the mortgage rates we saw in August of 2021 when the rate was 2.77% for a 30-year fixed. But for sure, the rate we're seeing today, that 6.47%, is down from the peak we saw in October of 2023 when the 30-year fixed was 7.79%. And you can see right there, those rates have steadily been going down. And because I know you're going to ask what were the mortgage rates under former President Trump, here is the 10-year chart from Freddie Mac. You can see the Trump administration years are right here, and the 30-year fix under those years ranged from 2.65% to just under 5%. So why are rates going down? Freddie Mac says because of the likely overreaction to a less than favorable employment report and financial market turbulence for an economy that remains on solid footing. That's a fancy way of saying investors freaked out for no real reason and caused that market tank on Monday that I told you about in this video. I also told you on Monday one of the biggest reasons for that market crash in the United States was a reaction to a recent jobs report that found employers added 114,000 jobs in the month of July instead of what we've become used to, which is in the high 100,000s or 200,000 jobs added. That report also found the unemployment rate hit 4.3%, which is higher than it's been, but still relatively low. So Freddie Mac is basically saying investors took that report and several other things and then freaked out thinking the economy was going to crash and then started pulling money out of the market. But here we all are on Friday, and as of right now, the market hasn't crashed and neither has the economy. In fact, as we wrap up this trading week, the Dow has mostly recovered all of the losses from Monday. Of course, that can always change, but that's the situation as of today. So if you want to read more from Freddie Mac about this mortgage rate stuff, I will email it out to you tonight in my News Grill News Roundup email, so make sure you sign yourself up.